Hello and welcome. You're watching Buy Now Sell Now with me, Somit Sarkar, and my co-anchor Cheryl D'Souza. Well, markets continue to gain 13-day, I believe.
Yes, absolutely. 13-day of gains coming in for the markets. Fresh record high as well is what Nifty logged in today's trading session. A very good morning to you, Somit. But there are a lot of stocks that are making the move in today's trading session. We will get to that in a short while from now. Keep an eye out on all the auto counters because they are reacting to their auto sales number. You saw a dip come in for Tata Motors and the stock has reacted exactly as per the script on back of a weaker than expected auto sales number in the month of August. Apart from that, you have Maruti Suzuki who's come out and who's cut prices for two of their cars variants on the lower end. And on back of that, you have Maruti Suzuki that's in focus, apart from the fact that it's come out with its numbers. But let's talk about the list of gainers then. You have the Bajaj twins ruling the charts today. Bajaj Finance as well as Bajaj Finserv, both of them are top gainers on the Nifty. Remember that one of the arm has come out with the IPO dates. So that's the reason why both of these counters will be in focus. You have HCL Tech, Hero MotoCorp, BPCL among the other set of gainers in trade today. While on the flip side is Dr. Reddy's, Tata Motors, Hindalco, M&M as well as Bharti Airtel that is in the losing end of the market. If we talk about the advanced decline ratio, is neck to neck at this point in time with the sectoral front, metal index being the top sectoral loser followed by auto, and on the flip side is FMCG and IT that's holding on to very strong gains. So that's the way how the markets are looking like at this point in time, Somit. But like I mentioned, we have stocks moving based on news, and it has to be Gujarat Gas as well as GSPL.
Well, yes, both the companies have been buzzing in trade, and that's on the back of the big corporate action that we are seeing when it comes to all gas-based Gujarat companies. Now, it's GSPC, GSPL and GL which will be merging with Gujarat Gas, and post the merger is completed, the merged entity will carve out the transmission unit and that will be separately listed on the exchanges, and that unit will be called as GSPL Transmission. Now, if you look at the merger ratio, GSPC, which is an unlisted entity, they will get and most of this shareholding by GSPC is owned by the Gujarat government and their entities, and there is some shareholding which is owned by a couple of banks as well. Now, they will get around 10 shares of Gujarat Gas for every 305 shares that they are holding. GSPL, which is a listed entity, there the shareholders will get around 10 shares for every 13 shares that they are holding in GSPL. And because of this merger or this share swap ratio between GSPL and Gujarat Gas, what we are seeing is that GSPL shareholders could get a what we can say as a premium when they buy Gujarat Gas shares. Now, if you look at Gujarat Gas share prices, they are around 660 rupees, while GSPL is trading at around 450, 454. So, if you look at the share swap ratio, there is a premium right now of around 10 odd percent if you buy GSPL shares currently. Now, apart from that, if you look at GSPC, which is an unlisted entity, it's primarily involved in gas trading. It has an average volume of around 15 MMSCMD and does an annual average PAT over the last 5 years of close to 1300 crore rupees. Now, why the government is going ahead with this merger and this corporate action? They want to bring in business synergies, they want to simplify the holding structure and want to unlock value. This amalgamation of GSPC into Gujarat Gas will eliminate the related party transaction that we are currently seeing, where Gujarat Gas has been buying gas from GSPC, so that moves out, and GSPC always charges a profit given the fact that they have to do the transaction at an arm's length basis, which moves out, and indirectly this will boost Gujarat Gas's profitability, operating profits, and also its return ratio. Now, as per management, if you see, this merger is EPS accretive right from day one, and this EPS accretion could be more than 50% as per the management. So that's a positive coming in for Gujarat Gas, and hence we are seeing this kind of an up move when it comes to the share prices of Gujarat Gas. In fact, a lot of brokerages have also upgraded their rating on Gujarat Gas and have hiked the target price. The best or the biggest upgrade coming in from ICICI Securities, it's a double upgrade from sell to buy, and they've also hiked the target price to around 755 rupees. Now, also amalgamation of this GSPL will simplify the structured layer holding that we are currently seeing, and that holding is as GSPC owns around 37% stake in GSPL, and then GSPL owns around 54% stake in Gujarat Gas. So this complex structure moves out, and it will be a simple structure where government will directly own in GSPL and in Gujarat Gas, which will also have GSPC. So it's kind of an indirect listing of GSPC also that we are seeing when it comes to this entire corporate action. So complex corporate action, but will simplify the shareholding structure and the businesses of both the Gujarat-based companies going forward.
All right, like the way how Somit said, complicated structure, but will be beneficial for the counters going ahead. In fact, let's hear what the management of GSPL had to say on this corporate development.
Cash flow generated by the combined businesses can be deployed more efficiently in future to fund organic and inorganic opportunities which are going to rise in the expanding energy market.
The valuation which we have taken for GSPC is close to 21,000 crores. And of that, close to 35% is with respect to the gas trading business. Basically, the valuers have taken a number which is a lower number to the industry average which is there. That our peers which are there is lower than that. Basically, if you look at our previous year, EBITDA number for gas trading is around 1,100 crores. So if you compare the number with respect to the multiple, it's little bit lower than the market which is there. Its multiple is around between 6.5 to 7. That's the multiple we have taken. If you look at the industry benchmark, it's around 8 to 9. That's the and I think we have taken a reasonable number. We have cash to the extent of 2,300 crores, and we have valued other businesses, that is GSPL and our other investments, is close to 10,600 crores. Of which GSPL is close to 89% of the total valuation of other investments. It would range between 50% in encourages would be there, increase, because the entire gas trading business is coming into GGL.
Well, that was all about the GSPL and Gujarat Gas and all Gujarat-based gas companies. Moving on to an ET Now exclusive. Now, top institutional shareholders of UTI Asset Management Company have revived their proposal to sell their equity stake in the mutual fund. Now, who's the front runner for this? We have Anurag Joshi joining us with this exclusive story.
Top institutional shareholders of UTI Asset Management Company have revived a plan to look at a proposal to offload their equity stake in the mutual fund. Tata Asset Management has emerged as a front runner in the transaction, sources tell us. Now, last year, Tata Asset Management had looked at UTI mutual fund, but the transaction did not go through because the talks had stalled. Now, if a successful transaction does take place, the value of the transaction for the 45% equity stake that the institutional shareholders of UTI AMC are likely to put on the block will be about 6,700 crores. So that's $800 million. Now, these institutional shareholders are Bank of Baroda, LIC, PNB, and SBI. Punjab National Bank has the biggest shareholding among them, and this followed by Bank of Baroda, PNB, and SBI, who have roughly about 10% equity stake in the company. Now, Tata Asset Management has equity stakes of Tata Sons, which owns 68% in the AMC, while Tata Investment Corporation owns 32% in the asset management company.
All right, thank you so much for that, Anurag, for getting us all of those exclusive details. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get your answers for all of your stock-related queries. Remember, viewers, you can write to us. We are live on the WhatsApp number. Do remember, each time you write to us, mention your name, the location that you're writing to us from. Apart from that, mention your buy price, quantity, as well as the time horizon in case you've already purchased a stock. And if you've not purchased a stock, then do mention the time horizon that you're looking to hold a particular account. In that way, we will be able to guide you better and take your query to the right set of experts. On the technical today, that is for the short term, we have Kunal Bothra on the show, while on the fundamentals, which is ideally your medium to long term queries, we have Mr. Chokkalingam, who's joining us on the show today. A very good morning to you, Mr. Chokkalingam, as well as Kunal. Thank you so much for joining us on ET Now. And let me first start taking the query that's already pouring in. The first query that I have is coming in from Karthik, and he's holding Quest Corp in his portfolio at a price of 760 rupees per share. From there on, he wants to know, can he see some sort of a movement in the stock price, Kunal? Does it make sense to stay put with Quest Corp, or should he look to exit his position in this counter right now?
See, it depends on your time frame because on the short-term basis, the stock is going through a decent recovery. It's come back from I think 400 or sub 400 levels seen in the start of 2023 to now on the verge of breaking past about 800 levels. So I believe that in that sense, the stock has recovered quite well. Longer term wise, the stock is still off from its lifetime highs of 1300 approximately, which means it's still 50% away from its long term levels. So I think on the short term basis, you might expect that the stock may continue to move up higher. If you're looking at this as a time frame, assuming say the next 1 to 3 months, you could be looking at a potential target of 850 to 900 for Questcorp.
Well, the next query is coming in from Mr. Venkat Rao from Vishakhapatnam. He's a long-term investor and he wants to know whether should he purchase Jana Small Finance Bank. He's asking for a safe entry price. Mr. Chokkalingam, what would be your view on Jana Small Finance Bank, and is the current level a good price to buy the stock?
Most of the small finance banks, because the valuations are stretched. Today you look at HDFC Bank, that valuation itself has crashed like anything. And there are many quality banks even in the PSU available at around 1.4 time, 1.5 time. And if you look at a bank like a Karnataka Bank, which has got 100 years of credible history, it's in fact trading at 5-10% discount adjusted book value. And the competition has intensified in the banking space. So you have a different layer of new banking segment coming in, like small finance bank, payment banks, and now the whole industry has got 4-5 headwinds. So considering all that, I would suggest to sell Jana Small Finance Bank.
Right, so that is a sell call for Jana Small Finance Bank. Somebody has to buy. What was your take, Mr. Chokkalingam? Just a recap.
Yeah, so I have come out with a report on Karnataka Bank. Personally, also we hold it. It is 100th year. This bank has done phenomenally well. The problem was that this bank doesn't have a promoter, though it is 100-year-old company. But now, in the last 2 quarters, the corporate and institutions, reputed institutions like ICICI Insurance, they all came in and took a 42% stake in the bank. And second, that gives a lot of comfort. And second, this bank has recruited a lot of professionals and got into digital banking. And, therefore, I like Karnataka Bank a lot. I believe it can easily give 30-40% return in case they split it and they maintain the continuous growth momentum. In 3-4 years, Karnataka Bank can become even a multi-bagger.
Right, let me move on then and let me take this next query. This one is coming in from our viewer. This is from Mithu, who's writing to us from Mumbai. Kunal, IREDA is a counter. He wants to know whether he should go ahead and buy it right now, or at what level should he buy, and what's the target that you have in mind for the stock for a period of about 3 to 6 months?
See, after the steep rally for the stock price with a limited history of just about the last 1.5 odd year, I would probably expect that the stock should get into a further leg of correction. Wouldn't be surprised that the stock actually comes back to say sub 200 mark because of the so what happens is the volatility has to settle down for the stock. I think if I'm not wrong, just last week or the week prior to that, we saw similar single day price uptick of I think 10-15% for the stock, and post that we've not seen any major follow through up move, which means that the stock is due for a further leg of correction. And in such kind of a scenario, it generally retests the previous swing lows, and the previous swing low for the stock is around 160 levels. I don't expect such a sharper correction for the stock, but I think potentially sub 200 is what you can expect for the stock. That would be a point where you will have to start buying or nipping into the stock.
Well, the next query is from Bala from Chennai, and he wants to know what would be a good price to buy Power Finance Corporation. At what valuations, Mr. Chokkalingam, do you think one should go ahead and buy PFC?
In the last 30 years, if you see, the small cap, mid cap create a lot of wealth only in a thematic fashion. And one of such a theme is the PSU theme. And in the 30 years, it has played out already 4-5 times. And another fact is that, invariably post play out in the market, they also, correct and come back to the linear valuations. So I believe it is too late to buy the stock for long term. Maybe traders, can buy for short term of 1 to 3 months. But certainly for long term, I believe the valuations are substantially stretched in PFC.
All right, Kunal, the next query is for you, and this query is coming in from Manish Bhatt. He's writing to us from Ahmedabad. He has 3 lots of Dixon Tech September expiry, which he purchased at 13,100. He's saying the current price is around 12,600. He's saying he can hold till 12,400. But what's your take? What should he do? What sort of a strategy should he apply for this?
No, I think I don't see any reason why you should be holding on to the stock price. And I sense the reason for that is the volumes which are transpired for Dixon Tech on Friday and today's price action, which is almost at a zone where the stock has come back towards a 10-day, 9 to 10-day swing low on the short-term basis. So this indicates that there is a sudden weakness which has come back into the stock price, and this could potentially lead into a further downward leg into the stock. So unless you are looking to hedge this with say some sort of a put option at current levels or selling of call options at higher strikes to mitigate the loss in futures, then it's a different strategy altogether. If it's a an open trade for futures, then I would probably believe that doesn't make sense to hold on to the stock further because of the sudden weakness the stock is exhibiting on the charts.
Well, the next query is from Deepak Thakur from Ahmedabad. He holds around 100 shares of MTA Tech at a price of 1800 rupees. He wants to know whether should he continue to hold this counter or buy more. Mr. Chokkalingam, what would be your view on MTA Tech?
I studied it quite intensively. Business model looks rosy, but the ground reality is that the company seems to be struggling on bottom line front. The recent quarter performance also not at all satisfactory. So I believe it's a good sell even at current price.
This was coming from Satyaveni, who's writing to us from Visakhapatnam. Long-term investor, but wants a query for 1 year time frame. Kunal wants to know whether it makes sense to buy Laurus Labs right now for a period of 1 year.
See, it's a very volatile chart. I've tracked the stock over the last few years, and the stock exhibits volatility of 10-15% in a swing. So just keep that at the back of the mind because of the sudden volatility the stock may exhibit. The only good part about the last 4-5 months of the charts is that it's been trying to protect its previous swing lows, and slowly and gradually the stock is trying to inch back towards a breakout and makes a small or a short-term fresh swing high. So that's the only positive sign which is emerging into the stock price for Laurus Labs. In that anticipation, I would suggest that keep a potential stop loss in case if you're looking at this as a positional play, say closer to 400 mark on closing basis, and on the upside you can look out for targets at least in the range of 550 to 555.
The next query is from Thomas George from Kerala. He is holding 59 shares of SBI Life bought at a price of 1,567 rupees. Should he continue to hold this counter exit, Mr. Chokkalingam?
Continue to hold, though slightly stretched. It's a good management, large cap, and time like this, one should have small investors should have a more tilt towards large cap, and also the life insurance business is a perennially a growth business. Considering all this, you should hold it for long term.
I have a query on 2 stocks for you. Ashish Bhushan from Gurgaon wants to know about Praj. He has about 1,000 shares at a price of 760, and the other one being GSFC at a price of around 235 rupees per share. For your next 6 to 12 month time horizon, what sort of a target should he have on the stocks, and also primarily should he still be invested in both?
So I think you should be invested into both of these stocks. Praj specifically is something which I do track very closely, and I sense, in fact, remember I think we recommended this stock when it was almost 2 digits, 4-5 years back, and from there the stock has almost gone 10x. Now I still believe that at current levels the stock is something which you can hold on, provided you have a long-term time frame. My sense is that the stock is still one of the better performers from the sugar or sugar-related stocks, and it has done pretty well for itself even the last 2-3 months, where it's moved from 500-550 mark towards now 760-800 levels. So looks attractive. Would recommend a hold.
The next query is from Ranjan Karkera from Bangalore. He has around 2,000 shares of Vodafone Idea bought at a price of 15.75 rupees. He wants to know whether should he continue to hold this counter from medium to long term view. Mr. Chokkalingam, what would be your view on Vodafone Idea?
Yeah, I studied quite intensively. Fundamentally, it is not a hold; it's a great sell. But then, if by any chance the promoters sacrifice in terms of writing off the equity, or the lenders sacrifice in writing off the debt, then the stock can do phenomenally well, because on its own at the current market cap and current borrowing size, it's going to be a tough time for Vodafone Idea to reward the investors, because now the equity base is becoming more than the annual sales, and therefore you have to make a lot more money to make a credible EPS, earning per share. That's going to be a big challenge, particularly considering the fact that now, if we see every quarter, it has been losing the subscriber to the Reliance Jio or to Bharti Airtel. So therefore, it's a risky to say outright go and sell, but because by any chance there is a big sacrifice from the promoters or lenders, then the stock can play out. Otherwise, in my view, in research view, it's going to be very, very tough for Voda Idea to reward the shareholders.
Right. And Kunal, what would be your technical view when it comes to Vodafone Idea?
See, again, I think till the last week or so, the stock was trading at 16 and a half odd zone. It was trading above the long-term moving averages. But Friday's move and today's move specifically is now letting the stock price threaten to break below its 200 moving average. It's not fallen significantly below this level since the last, I think, 1 year, as what I can see, except for intraday charts, of course. But I think if in case this time around the stock closes significantly below its long-term moving averages, you could see a sharper reversal into the stock price trend. So I would suggest to be a bit careful of that. Would not suggest a fresh buy, at least at current levels, but keep a stop loss in case if someone is holding on to long positions. Keep a stop loss of 14.5 on closing basis.
Well, that was the technical and the fundamental view when it comes to Vodafone Idea. With that, let's slip into a short break and we'll address more of your queries post that.
Welcome back. You're watching bnsn on ET Now. Let's continue taking all of the stock-related queries. And the next query that I have is coming in from Veni, who is a senior citizen writing to us from Hyderabad, wants to know about IRCTC. 300 shares at a price of 1,034 rupees per share. Our viewer is saying he's in heavy loss, can hold or look to average. Kunal, what's your take on IRCTC right now? Definitely way off the buy price. What's your take now?
Yeah, and I don't sense that it's a good strategy to average the stock at current levels, even though it's retraced back towards its 200-day moving average. Because, IRCTC, even on the way up, I remember, I think there was a phase in the month of May, June or somewhere, where many of the railway stocks had moved up by a margin of 50% to 60% and more. I think this stock had underperformed. So, it's been one of the weaker stocks from the railway pack over the last, few months. My sense is that this underperformance may continue, because even the erstwhile railway stocks or the high performing railway names, these stocks are due for one more leg of correction. So I think in that sense, you may probably expect some more downtick on the stock price. In case if it dips down to say 825, 850 mark, that could be a point where you may look to average.
The next query is from Ananta Krishnan from Madurai. He's holding around 100 shares of Aegis Logistics, bought at a price of 815. Kunal, what are the short-term prospects on this counter?
So short-term charts are looking attractive for Aegis. In fact, the stock has completed a corrective phase from 755, 770 approximately as a bottom. The stock is making a comeback again. I think it's on the verge of a breakout today of a double bottom formation. So the short-term charts are attractive. In case if you're looking at a buy, then keep a stop loss range say closer to 770 mark. And on the upside, you might be looking out for targets in the range of 850 to 870.
All right, this one is coming in from Nikhil Sharma from Mumbai, and he's saying he's an intraday trader but wants to know about a long-term aspect of NTPC. He has 50 shares at a price of 415 rupees per share. He's saying he is in loss right now. It is below his stop loss of 413 rupees per share on an intraday basis. It slipped below that. So he wants to know whether he should go ahead, book profits, or hold this for the long term. What's your take, Mr. Chokkalingam? Let me come to you on this one, because NTPC for the long term, what's your take now?
Definitely, even 2-3 years down the line, it's it's fine. Earnings are discounted now. That's my view. But if he is willing to wait beyond 3 years, and then he might expect some significant returns. So otherwise, he can sell it.
Any view on NTPC? We have actually a couple of queries also on NTPC that we will have in a short while from now. But what's your take? What should Nikhil do with his holding right now? And also, if somebody wants to buy NTPC afresh, what's your take?
So on both fronts, whether you are holding on to long positions or whether you're looking to buy, I think it's a good stock to hold on. I sense that NTPC is getting back into a breakout mode, and even on the short to medium term charts, even if you're looking at say another 1 to 3 month kind of a perspective, I would probably expect that the stock should surpass about the previous highs of 430, 440 and move towards a new zone of closer to 450, 460.
Well, Ravi Shankar from Kumbakonam is holding 50 shares of Gujarat Gas, bought at a price of 600 rupees. Mr. Chokkalingam, do you advise him to continue to hold this counter after this mega corporate action that we have seen among multiple companies in Gujarat?
Yeah, investors can hold it because of this mega restructuring, and also Gujarat is going to be the focus of the whole country in terms of a lot of capex happening. So all these companies which located in Gujarat, I'm sure they would reward handsomely. So it's a hold for medium to long term.
A query coming in from Ajay. He's asking whether it's a good strategy to buy Gujarat Gas at current prices. So what would be your suggestion on that?
Because the whole market is stretched, and after the news also you are seeing firmness of the stock price. So with a 464 lakh crore of market cap, which is 5.5 trillion now, I have a strong belief that the small and mid cap space should see periodic significant corrections. So if you want to buy fresh, one can always wait for such opportunities.
All right, this next query that I have is coming in from a viewer Satish Kumar, writing to us from Bangalore. Kunal wants to know about Utkarsh Small Finance Bank. Have you tracked this one? He has 5,000 shares at a price of 59 rupees per share. He purchased the stock in April.
Well, don't track it off regularly, but I think just looking at the charts while you were speaking, the stock is still reeling below its long-term moving averages. Nothing exciting about the charts. In the last 3 months, it's just dragged itself from 55 levels to now 48, 49 where it's trading right now. So it doesn't look like a chart where you should probably consider buying. I would recommend that if you're holding onto the stock, good time to exit. Shift towards a prominent large cap name, maybe something like an ICICI Bank, an IndusInd Bank as a contra buy, or a Kotak Bank could be a better bets.
Next query is from Sushila Belleri. She's holding 1,467 shares of Ola Electric, bought at a price of 102 rupees. Mr. Chokkalingam, should she continue to hold this counter or exit?
Yeah, so I have studied Ola Electric. Its current market cap is around 50,000 crore, and it's still making losses now. And there are a lot of players, already in EV two-wheelers. Now, I find it difficult to justify the current price also, but then the best way to look at is current market cap is 50,000 crore. If somebody wants to hold it for say 5 years, and you should obviously expect at least 50-60% return. So which means the company should make about 3,000 crore of profit within 5 years to justify the current market prices. So I am not sure whether this company can make that kind of profit in 5 years. If any investors, the shareholders of the company, if they get conviction that this company is set for making more than 3,000 crore profit in 5 years' time, then one should hold or even buy at current prices. But I am not sure. It's going to be a very tough journey because unlike the fuel injection two-wheeler, in EV, the market structure is different. You will end up with more than 20-30 players in the industry. The competition is going to be very, very intense. So therefore, I would not suggest at this juncture to buy Ola.
Your view was on NTPC. I believe you said buy right now, right?
Yes, buy as well as a hold.
Buy as well as a hold. So all of our viewers who are asking whether it's advisable to go ahead and buy NTPC at the current price or to hold their current holding, you got the answer from Kunal. He already answered that query a short while ago. The next one, Kunal, is coming to you from Imtiaz. He's writing to us from Kolkata. He has 200 shares of L&T purchased at 3,465. He has about 200 shares of DLF at 776 rupees per share. He wants to know what should he do with both of these counters right now.
So hold is what I would recommend for both of these names. In fact, L&T is something which, in case if it's a assuming if it dips down to 35.50 mark, which was the previous swing low, if I'm not wrong, for L&T, and I think it coincides just about 40-50 points away from its long-term moving average around 3500 mark. That could be a point where you may look to consider averaging out further. DLF, of course, the stock is going through a bit of a corrective wave, but my sense is that the charts on the longer term basis are attractive. What we are seeing right now is more of a sector rotation at play, and that's why one of the major performing sectors, the real estate stocks, have taken a backseat over the last 3-6 months. It's a process. It could probably continue for another couple of months, but if you're a long-term investor, stay put.
Well, the next query is from Indu and it's on Dixon Tech. She's holding few shares of Dixon Tech and she wants to know whether should she continue to hold this counter or sell given the fact that volumes are very high. Kunal, what would you suggest on this?
So the charts are showing weakness for Dixon Tech. I was mentioning earlier that the stock had on Friday shown higher volumes, and the follow-through tick for the stock is on the downside, which means that the inclination is more towards the stock potentially continuing the downtrend, even if it's a short-term basis. So would suggest a sell or an exit.
Reshma Bhatia wants to know about two OMC counters, Mr. Chokkalingam, HPCL as well as BPCL, currently sitting with a 20% profit on both of the stock. Does it make sense to continue to stay put with this or look to book out profits given the fact it's OMCs, they are dependent on what exactly happens globally with the crude price movement, and also when you talk about where the policies are headed. Also another one is on BEL. She's sitting with a loss on this one of 5%.
According to me, BL is a sell. I studied the valuation. I don't have any comfort on it. HPCL, BPCL not that bad as compared to other PSUs which are having a stretched PE. But the problem, as you rightly said, you have a lot of uncertainties. Even for analysts like us, it's very difficult to forecast its earning stream for 3 years. With confidence. You have oil price swing and you have a policy interventions. So all these make it very difficult, and then you also have once in a while inventory losses for these companies, refinery companies. So I would better give sell, and I would suggest buying two PSU stocks which I believe are extremely safe to buy for medium to long term. One is GNFC, Gujarat Narmada Fertilizer and Chemical Company. I like this stock a lot. In the last 3 years, it has come down by 30-40%. And I've gone through the annual report, latest annual report uploaded a couple of days back. Sitting on a cash of more than 4,000 crore, which is 47% of the market cap. And they're expanding most of their chemicals, and chemicals account for 90% of the profit, more than 90%. I personally do not hold GNFC, but I have a tremendous confidence in the stock. And let us not forget the fact that they have a very small profit-making IT business also. So if at all the management wants to reward, they can even demerge and list it, and they give very good dividend. So this is one stock, and second stock, Balmalari Company, where I also personally hold Equinomics, hold the stock, Balmalari Company. In fact, weekend they have uploaded on BSE site the CMD's interview to the media. It's a phenomenal. They have given a MOU of 41% growth in the top line. And the company is 150-year-old company sitting on a huge, rich logistic assets. I am really surprised why this stock has not participated in the way other PSU stocks have participated. I may be wrong, but I have a tremendous confidence in Balmalari Company, considering its assets and valuation. So I would suggest these two PSU stocks, all those who made losses or who made money in other PSU stocks, to consider.
It's from Rajendra from Bangalore. He has around 100 shares of Apollo Tyres bought at a price of 493.5 rupees. He wants to know whether should he continue to hold this counter or exit. Kunal, what would you recommend?
Short term wise, you can continue to hold on, but you keep your stop losses at a 3-day swing low, which is around 485, because if the stock manages to break below those levels or even close below those levels, you may probably expect that the stock could get into a corrective phase. So hold on to the stock, but keep this stop loss in play.
All right, this next query that I have, just a minute, let me just, there are a couple of queries actually pouring in non-stop, so I've kind of lost track of it. But this one is coming in on NHPC, Kunal. 101 is the buy price. We have Ashish Sharma, who's from Jabalpur, who wants a 2-month view on this one.
See, I would recommend to hold on to the stock. Now I understand that it's corrected from I think around 115, 117 levels to sub 100 mark. But then it seems like the stock is going through the last 2 weeks of more of plateauing out. So this 95, 96 levels is acting as a support for NHPC. So keep that as a trailing stop loss in case if you're looking at this as a short-term play. If you're looking at this as a medium to long-term play, then I would recommend that at current levels you can look to buy as well as add.
Well, that was Kunal. Sorry, that was on NHPC. With that, let's slip into a short break and we'll address more of your queries post that. Welcome back. You're watching Buy Now Sell Now with me, Somit Sarkar. The next query is coming in from YK Rao from Hyderabad. He's holding 100 shares of Affle India, bought at a price of 970. He wants to know whether should he continue to hold or sell this counter. Kunal, what would be your view on this counter?
Yeah, long-term wise, it's a hold. The stock has confirmed a breakout of I think a 2-year or a 3-year consolidation from 2021 highs of around 1350 mark on closing basis. So I think that's the breakout the stock has confirmed, which means that it started off a potential long-term uptrend. So I think in that sense, you can continue to hold on, but provided you're a long-term investor.
The next query is from Sangeeta from Chennai. She's holding few shares of Cochin Shipyard, bought at a price of 2,667. Mr. Chokkalingam, should she continue to hold this counter or exit?
One should sell. There is no valuation comfort in Cochin Shipyard.
Okay. The next query is from Ashish Sharma from Jabalpur. He's holding 2,000 shares of NHPC, bought at a price of 101 rupees for 2 months. Kunal, hold this counter?
Yeah, I would recommend a hold, and for 2 months, I would probably place targets, say somewhere in the range of 105 to 113.
The next query is from Rekha. She's holding few shares of Adani Power. Currently, she's sitting on a massive profit of 290%. She wants to know whether should she buy this stock whenever there's a fall and hold for the next 2 to 3 years. Mr. Chokkalingam, what would be your view on Adani Power?
Valuation is stretched, but still, if she is willing to hold it for 2 to 5 years, definitely one can hold. And in case it falls 15-20%, one can aggressively add also.
The next query is from Ramamurthy from Behran, and he holds a few shares in Canara Bank, IDFC First. Is sitting on a loss of 10% on IDFC First Bank. Mr. Chokkalingam, what should he do? Should he book his losses in IDFC First and just keep the investments in Canara Bank?
Definitely, Canara Bank is better than IDFC. IDFC Bank is good, no doubt. Management is also very good, but the problem is the liquidity base is so huge. It is going to be very tough to create a lot of significant wealth for the investors when you have that kind of liquidity base. And of course, because the investor has given a choice between these two, I have recommended. But I have a firm view that you ought to be very, very selective in the banking space. Just, most of them are not buy now because of there are 4 to 5 headwinds. The deposit rate is going up, and they have to make reduce the credit deposit ratio. They have to increase the liquidity provision ratio. They are expected to make provision for expected credit loss. So then their lending to NBFC space is coming down. So there are several headwinds. So you have to be a little cautious on banking space as a whole and go for, as I mentioned, Karnataka Bank, go for highly beaten down and still the deposit advance which are growing in double digit. That kind of bank you should choose, which means the price to adjusted book value should be around 1 time and also fulfill nearly double digit growth in advances and deposits.
All right, this one is coming in from a viewer who wants to know about Dr. Reddy's actually, Kunal. This one is coming in from Shekhar. He's writing to us from Bangalore. Wants to know whether it makes sense to buy 100 shares of Dr. Reddy's currently for the short term.
So I'm not sure on the quantity. That depends on your risk profile, your entire portfolio. But I would probably sense that a better rate to buy Dr. Reddy would be closer to the swing support, and that is just around that 6,800 mark or a shade below those levels. That's where the stock over the last 1.5 odd month has been taking multiple supports. And today's bearish candlestick pattern is also not helping the cause for the stock price. That would probably indicate that maybe over the next 1 week or so, you might see the stock drifting a bit more, and so 6,800 or slightly below those levels could be a better entry point.
The next query is from Rajiv. He's holding few shares of Steel Authority of India Limited at an average cost price of 98 rupees. Mr. Chokkalingam, what would be your view on sale?
Definitely, one should sell. This is based on the research, and there is no doubt at all, because steel prices have corrected a lot, and steel and other metals, the prospect depend heavily on Chinese economy, which all of us know going through a little difficult time, and which is also reflected in the crash in the iron ore prices. So it's a good sell at current price.
All right, this one's coming from Vidya, who's writing to us from Bangalore, has about 1,000 shares of Ircon International at a price of around 80 rupees per share. Wants to know, makes sense to stay put with this for the next 3 to 4 years. Mr. Chokkalingam, what's your take coming in on this one? Do you think Ircon International is the best pick in that space for the long term?
Honestly, this particular stock I have not studied in the recent times, so I am unable to give research view.
What's your take coming in on Ircon International? Have you had the chance to check this one? Our viewer wants to buy, has 1,000 shares at a price of 80, and we have another viewer also, who's Sheshama, who has about 200 shares at 292.
So the one who's holding at 80 levels, I think you can continue to hold on. The stock is still into an uptrend. But the concern with the person holding on to the stock at 290 levels is that the stock is going through a series of mean reversion just around the 200 moving average. It could probably come back to that 230 to 33 mark. So for long-term investors bought at lower levels, it may not, this additional 40-50 points for Ircon may not be a major reversal. But for someone who's holding on to the stock from a higher levels, I think could probably expect some more pain. So 230 to 35 is a better levels to retest.
All right, so 30 queries done in today's edition of Buy Now Sell Now, and that was the last query for today. Thank you so much, Kunal, as well as Mr. Chokkalingam, for joining us on the show and taking all of our viewer queries. But as HDFC First, I beg your pardon, IDFC First Bank completes 5 years since its merger with Capital First. MD and CEO V. Vaidyanathan wrote to shareholders that they aim to build a world-class bank in India. He also unveiled an ambitious roadmap for its Vision 2.0 as they aim for 6 lakh crore rupees in deposits and 5 lakh crore rupees in loans by FY29, with a focus on customer centricity, digital transformation and strategic growth initiatives. The bank aims to achieve a AAA rating and significantly improve their profitability. He also noted that customer deposits have increased from 40,000 crore rupees to about 1.93 lakh crore rupees, while operating profit has grown from 749 crore rupees to 6,030 crore rupees.
Well, with that, it's an end to this edition of Buy Now Sell Now. Stay tuned. Keep watching Now.